Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
5,400 to 5,500 range is the range that we were talking about for the upside, in that if you actually had a deal, right? Like we signed a deal with Japan or Vietnam or like anything, then you suddenly have to go, okay, vol is actually going to come down because people are seeing the deals come in, and then you have to like kind of reduce this expectation of there being kind of like a ceiling. But if you just look at the positioning, and thanks for letting me show this quickly, if you come in, and this is what the new dealer positioning is showing us, here's SPX, right? And if you see a positive bar on this chart, that is a dealer positive gamma position. So the dealer positive gamma positions we talking about is 4,800 down to really 4,500, this whole area. This is where there's like possibly enough dealer gamma, positive gamma, that they would start buying that dip. And you would have to think that the vol premium gets pretty rich in that area. And then you also say, well, from a sentiment perspective, those are very big positions. And so there has to be some funds down there that are saying this is value for us in the 4,800 area. You're generally not going to sell a put if you think it's going to get significantly traded through, right? So that's the very clear downside area. And then when you get up into 5,400 and above, you start to see the positive gamma strikes, which is driven by call selling, start to pick up a little bit, right? So it's not huge, but it's just general area. So this big one right here is 5,500. Well, if you look at S&P high today, we got up to 5,470, right? We started to sniff that area, but you see that reaction come in where selling calls in this environment to me makes so much sense because we don't actually have a deal. Vol is still very high. We rallied 2% overnight on a tweet. What does Trump tend to do? He tends to walk back whatever he just said about 5 minutes ago. And so, that's a great way to get short the market, but also if the deal is real, then you would think that VIX and the vol comes in. And if vol comes in, then you would think that out of the money calls would also kind of get crushed, right, to what Hans said earlier. And so that tends to make a lot of sense to me. The other thing that's interesting is if you just look at spider positioning, and again, we take this data from the exchanges and we add in some new modeling, and so we've never before been able to show people, hey, this is precisely where we see market makers as long and short options. You can see these are negative gamma bars in the S&P 500, right? It's negative really across the board all the way up until about 550, 560. This curve starts to flatten out. So what is this big negative curve meaning? That means right here, SPY 545 all the way down to 500 is just massive spider negative gamma. What does that mean? That means that this zone of 5,500 to 5,550 where we traded today is like 5,000 to 5,500, right? That 500 point range. It's just all negative gamma, right? It's no coincidence then when you look at what the prevailing range has been over the last month, you just see we've just been ripping through that level back and forth like a ping pong ball. And the problem is that you assign a narrative to why we are doing that. I mean, this is the range here, right? So dealer positioning has not changed at all. This is 5,500 down to 5,000. Really, we're just flinging back and forth between this range because there's no liquidity and we're just reacting to tweets, right? No actual, nothing concrete. So I think, just to project forward, I think what we're seeing here is 2022, where we just grind lower all year. The VIX probably put its high in, and the only reason that I think that the VIX would go higher is if the credit market breaks down. Because if you look at historical VIX, true VIX spikes, 40, 50, it corresponds to credit market issues. And that is because if you are in bonds, right, and you are worried those bonds are going to go to zero, then you buy equity puts because that's the way that you hedge your bonds, right? Because equities go to zero before bonds do. And so, that's the primary driver. And they're generally going to be more price insensitive versus like an equity vol trader, right? And so I think this looks a lot like 2022. We just grind down. And then when do we stop grinding down? Well, like probably when Powell's like, I'm going to cut rates. And it's kind of like 2022 is like, when are we going to stop grinding down? Well, I'm no longer going to raise rates, which is sort of not exactly the same thing, but echoes it, right? Basically you get the Fed put kicks in, I guess.
So kind of a higher vol regime where, do you think VIX 30 is the new 20 kind of thing? Or can we get down into the low 20s? Is that possible?
I mean, this is 2022, right here. And we were 20 to 30 was the average value in VIX and vol. And why should we expect that to really change right now? Okay, maybe if we sign 10 deals at once and everything turns around real quick, then maybe that paradigm shifts. But they just said it's going to take 3 years to get a China deal. So I don't know. And the other thing that's interesting to me, and this plays back into really what Samantha's specialty is in terms of, the macro to micro. If you look at equity correlation, right? So correlation measures how in sync individual components of the S&P 500 are. So like does NVIDIA, Apple, Tesla, et cetera, do they all trade with the S&P or against it? The most bullish market we've had was the semi-AI chase, semi-stock AI chase in July of last year. year, right? Where, Nvidia is going up 20% a day, and correlation hit the lowest it ever has, which means that people were betting on individual stocks, right? Like it's guaranteed that I need to be long equities, but I need to be long more of Nvidia because that's going to outpace the equity market, right? That is not the environment right now. The environment is, do I own equities at all, or do I own cash or Bitcoin or whatever, right? And so correlation is now up to 30, and that's a huge spike from last year. But look at where we were in 2001 and 2022. Like we've just sort of like moved back to that environment where the macro is so much more of a driver here. And I think everyone says that, but there's no reason for everything to go back to where it was in 2023 and 2024 right now, right? If we get trade deals done and they cut rates and we get, Donald Trump tweeting about the daily Dow price or whatever, then okay, that's a different regime to your point again. But right now we've kind of just normalized, and why should any of this stop? I just don't see any reason for it to end.
Let me just show it up because you've mentioned two things that I want to jump on. So this is that growth value rotation chart that I'm always on, among others. But the point is, when you were talking right now about that big NVIDIA push from July until the top, which was about July 19th, actually, it was basically May, June, and July, that yellow arrow, hopefully you can see it. That is when actually Craig and I were doing a Wednesday market macro to micro, and it was focused on, I'm pretty sure it was July 19th. Anyway, it was all about the yen carry trade unwind coming in. So basically, this is literally the top when we came crashing down into that August 5th convexity low, right? But it took weeks before it was safe again, and the market was able to really get going. So basically, we started rolling over beginning of the year, this concentration risk unwind. We have been coming down. We're in bear market territory, full stop. So what I'm trying to say is we're still down here slogging it out March and April. It is not safe until we get back above this zero line. Hopefully that makes some sense. And the only way I'm bullish, and I keep going over this with clients as well, is if we can kind of pull out a potential, left shoulder head, that looks like a terrible color to use.
I got it. Yeah.
If we can come back up and trigger above this 2 ratio, if we can get back above this 0, then fine. We're going to have a beautiful growth rotation. We're probably going to have, an easy time of getting back to that 6,100. But until then, no. And to answer the other question, which was related to credit spreads, this is one of my bets early, and I kept saying it. This is NASDAQ composite on a weekly, and this is high yield spreads down below. You can see where basically during COVID, we had this nice long trending, nobody was worried about credit spreads, and then all of a sudden they blew out, right? Now, we had the same type of very, very long descending tightening of credit spreads, and now we are above that trend line. Now, doesn't mean we can't come back down, tighten up, which by the way, they're trying to stabilize the past few weeks, right? But also not moving. So it was very, very dangerous. Now, you can also see what's happened with NASDAQ composite. We came back down into a perfect tag of the 200-day. The point is, this is still not out of the woods.
Right.
So when you talk about a credit event, I am on this. In fact, this was one of the things I said early because I've been tracking this every single week. I look at these charts, right? So this is where I said, no one's expecting credit spreads to widen or the yen carry trade to move higher. I am. So that's still in play. That's not resolved.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.